Absolutely. Hi, good morning, everyone. My name is Adina Bergstrom. I am General Counsel and Chief Operations Officer for a company called Gavnat Public Insurance Adjusters. For those who have not worked with a public adjuster or a firm that does what we do, we help policyholders through their insurance claims. We work with a lot of associations, a lot of property management. When you have an insurance claim, we help you through the process from beginning to end with your claim. So not on the buying the policy side, when the unthinkable happens or a storm comes through, we're the ones that help you through the process.
Good morning, everybody. My name is Eric Skarnes with Insurance Warehouse. We're a local independent agency here in Golden Valley. Our office specializes in the townhome condo association space. We're now the largest insurer of townhomes in Minnesota with just over 1,600 associations, which keeps us very busy. So what we wanted to go over today was simply the changing insurance market in Minnesota. If you've been on the board for a while, you've seen this over the last few years. Your insurance premiums have gone up and up and up. Your deductibles have changed. It's probably one of the worst things you have to talk about every year when it comes to your board meetings. Thankfully, there's some light at the end of the tunnel. We're starting to see some good movement in the Minnesota insurance space. So we'll talk about that, but also some of the pitfalls, the catch-22 that comes with that. Then we'll go through some case studies talking about claims, how the insurance ties into what Adina and her team do, and kind of go through a claims scenario both on the exterior and the interior so you guys can have a better idea of how that all works. So getting going here, the insurance market in Minnesota is changing for the better, which is the first time we've been able to say that in probably 10 years. We're starting to see a lot of good trends in the industry, both rates being more competitive, deductibles being more competitive, and having more options, which is a great thing. We're starting to see underwriter flexibility as well, which has been one of the last things we've had from underwriters in the last few years. So all positive things. What we're seeing on the rate side, so rates have gone down about 20 to 25% across the board. Now that doesn't mean that your renewal is going to go down 25%. It just means some carriers have lowered their rates where the average rate in Minnesota has gone down quite a bit. So a lot depends on the carriers. If you've been with one of the carriers that's been in Minnesota for all this hailstorms, the Travelers, Hartford, State Farm, auto owners, they're all still trying to recoup millions and millions of dollars from paying out claims over the last 15 years. Their rates are not dropping. They're staying somewhat stable or still increasing a bit. There's a lot of other carriers that have come into Minnesota with a clean slate, and they've been able to offer a lot lower rates simply because they're only pricing going forward for potential future claims, not trying to recoup for past claims. So on average, though, the rates are going down, which is great news. Underwriter flexibility. So if you've been on the board for a while, you've seen your amount of carriers willing to quote your association get smaller and smaller each year, where maybe you have one option, two if you're lucky. Most associations haven't seen 3 carriers offering a quote over the last few years. We're now starting to see that where we're seeing 3, 4, 5 carriers. It all revolves around the age and size of the association. So carriers wanted to eliminate large associations from their portfolio and older associations from their portfolio. And so if you were older or larger, or old and large, you had a really hard time finding new carriers. They've started to dial that back a little bit, where they're willing to write a little bit older and a little bit larger. We've also seen changes around grilling, which, just a show of hands, who's had to talk about grills because of insurance? Yes, not a fun topic. You have to ban grills or put some rule in place because your insurance company says so. Because we're in a more competitive marketplace, carriers aren't able to force that on you as much as they were before. So we've seen a lot of carriers either completely eliminate their grilling restrictions or relax them a little bit, which is obviously nice for you guys as a board. It'd be great to never talk about grills again, so I'm hoping we're moving that direction. And then we've seen new carriers come into the market. So we've seen a lot of non-admitted carriers come into the market, which is kind of what started the push to create a more competitive environment. And then in August, we saw our first admitted carrier, new to Minnesota, that was targeting the HOA space. So there's a company called Honeycomb that came into Minnesota in August. Been very competitive. They don't have any age restrictions. They'll now go up to $35 million in building values. Since August, we have over 100 associations with them already. So they've already provided a tremendous value to the Minnesota marketplace. Outside of that, we're starting to see other things. So 5% wind hail deductibles have been almost across the board for everyone. We're starting to see carriers offer less than that, which is surprising, but carriers are now offering 3% and 2% deductibles, which is positive to see. The 5% is an extremely large deductible. If you've gone through a claim with a 5%, you know the financial impact that pushes down to your unit owners, so having some lower deductible options is helpful. So what boards are experiencing, if you haven't had your renewal yet this year, you can probably take a little bit of breath of relief that it won't be as painful as the last few years. So you should see some additional options. You should see some rate relief. You may see some different deductible options. But the pitfalls of all of this is there are a ton of different carriers in Minnesota now, and it's not just going to the bottom of the coverage summary or the spreadsheet and looking at that premium. There's a lot of different carriers that now have different exclusions, different endorsements, different deductibles on how they actually apply to a claim. A lot of this is being pushed back onto you as a board member. And so now you have 12 different options that, maybe the agent eliminates a few and you have 3 or 4 to review, but they're 200-page policies. Each is going to be slightly different. And so just looking at the premium is going to potentially end up in some trouble for you. So there's exclusions that are 1 page that can change hundreds of thousands, if not millions of dollars in the event of a claim, stuff that Adina and I will go through in a little bit. But the good news is the premiums are getting better. The coverage may be lacking. So as you go through your renewal process, just know, unfortunately, it's going to take some more time and effort on your part as a board member. Work with your property manager, work with the agent to ask all the right questions, because once you pick that premium and skip on, there's a claim that happens, nothing you can do after the fact, which we'll talk about. So making sure you put the time and effort in ahead of time, know what you're actually buying is going to be extremely important, because Adina and her team are great at their jobs, but they can't undo insurance coverage. If it's in the policy, it's in the policy. So the catch-22 is boards have to do a lot more homework, which I know you guys get paid a ton to do this, so hopefully it's worth it, but a lot more homework for you guys going forward. So again, just as you're going through the renewals, just make sure you're asking the right question, talking to the agent, making sure you understand everything. The crazy thing in our insurance industry is that all of these exclusions don't have to be disclosed. If you look at a spreadsheet, you like the number, you move forward, great. If you pay for everything, sign off on things, that means that you have read the whole 200 pages, you understand it, you know the implications. It doesn't have to be disclosed by the agent. Now, if you ask about it and say, hey, is this exclusion in there? They obviously have to tell you, but they don't have to put it on the spreadsheet. They don't have to lay it out for you. So unfortunately, a lot of the burden falls on you guys to ask those right questions.
But understanding what each of those choices actually are and what you're spending your money on is equally as important. I think about insurance coverage as being like a giant blanket, right? The blanket is meant to cover the exterior of the association, those common elements in the event of some sort of loss. Exclusions and limitations in a policy do 2 things. Exclusions are like holes being cut in your blanket where you are not going to be covered or paid for those items. When we talk about limitations, just imagine that your blanket is smaller than it was before. And that's true when you have a higher deductible, because anything that's excluded, anything that's limited, or anything that's a deductible means you are self-insured for it, meaning you're paying for it out of your own pocket in some sort of way. Reserves, so it's part of a bigger financial plan, or through a special assessment. And we'll talk about assessments a little bit, but I have yet to see an association membership that gets a loss assessment related to maybe a storm claim and a special assessment at the same time. Not very happy neighbors in the event that they get 2 assessments at the same time. Here we're going to assume that all of the buildings are damaged. Don't even get me started on a scenario where someone says, I have no damage to my building. Why do I have to pay my share of this assessment? We're going to ignore that, and we're going to pretend it's every building that got hit with hail. We have a claim that's filed under the master policy. Now, master policy means the association's policy that's covering those common elements or exteriors of the building. Now, master policies are meant to zipper up with your unit owner or HO6 coverage. How those 2 work together is that under the HO6 coverage, that there is going to be a coverage provision for the loss assessment that covers that unit owner's share of the deductible under the master policy. So that 5%, under the normal 5%, gets split up amongst the unit owners and submitted to an HO6 carrier, assuming that your unit owners have them. Otherwise, it comes out of their pocket. So those 2 coverages are meant to zipper together to provide full coverage. What do we want to do in the event of a loss? I think number one, the takeaway is that you want to be prepared. You want to know what you're going to do in the event of a loss as a board. Working with property management, knowing who your professionals are going to be is very important. You want to document the visible damage. And again, calling in professionals to help you assess that damage is very important. Contractors can assist with that. Public adjusters like my company can assist as well. How we differ a little bit from a contractor is we will never be the ones that repair your work. We are just there to help you assess whether you have damage and whether you have the kind of damage that your insurance policy covers. So we also review your policy when looking at your damage. Again, think about exclusions, think about limitations. Once upon a time, hail damage would just be covered. That is not true in this day and age. There are lots of different exclusions and policies out there. You want to take steps to prevent further damage. This will be a common theme with an interior claim. This is called mitigating your damages. So you need to take reasonable steps to make sure that no further damage occurs. Think about a skylight getting hit by large hail. Perhaps you have water entry coming in. You want to take steps to tarp it or otherwise cover it through a contractor or other resource to make sure that that damage doesn't continue and get worse. And then notifying the carrier promptly. Now, again, having the right assessment done, acting with due diligence to make sure you have a claim to pursue is important, but we don't want to be kicking the proverbial can down the road. We don't want to say, oh, we'll save that for the next board because we're going to have board turnover in 3 months. You want to act promptly. Once upon a time, insurance policies all covered claims that were provided within a reasonable amount of time. That was kind of an ambiguous term, reasonable. Well, that depends on your situation and your circumstances. Now we're seeing policies that have strict deadlines in terms of when claims need to be turned in, and if you're past that deadline, you are in an upward battle to get that claim paid. The carrier is then going to evaluate the loss. Again, once upon a time, adjuster would come out, they'd write you an estimate, they'd issue you a check. Now we're seeing multiple inspections, engineering getting involved, lab testing done of different products, including shingles and siding. Has anyone here dealt with a matching issue when you've gone to get your association repaired? Exactly, show of hands. So matching exclusions are something that are becoming more popular under the insurance policies, again, to lower the premium. And what that means is if you have a roof shingle that is no longer manufactured or made and there isn't a close match for it, if you have a matching exclusion, the insurance company only has to pay you for those shingles that are damaged, and you could end up with a mismatched roof. Same with siding, same with other component parts. So these are the exclusions that we're talking about, like Eric said, could cost you hundreds of thousands, if not millions of dollars. So carriers are evaluating this. They're evaluating the product. They're doing more partial roof approvals. They are undervaluing your scope. What that means is when an insurance company comes out, they are looking at how much damage do you have. Is it to every building? Is it to just some? Is it to just some sides of your siding? Or is it to all 4 sides? That is called your scope. How much damage is there? So they're fighting about how much, and they're also fighting about how much will it cost. Even if we have perfect agreement on every roof is damaged, we may say, well, we believe the damage is $2 million to get the roof replaced, and the insurance company says, no, we only think it's $500,000 to get the roof replaced. So we're seeing more arguments on pricing as well. We're also seeing missing ordinance and law issues. Now, this is particularly true if you have an older association. Building codes change over time. And there is a big difference of what needs to be done to build or repair a building now versus 30 years ago. And if you don't have the right ordinance and law coverage, you could be paying for that out of pocket. Do you want to touch on that, Eric?
Ordinance and law is on there. Again, a lot of people skip it, but carriers have anywhere from no coverage to millions of dollars in coverage. It's usually a fairly inexpensive coverage to add onto your policy. But again, as a board's going through it, a lot of time they'll skip right over it, look at the bottom line, look at the premium, not have any ordinance and law coverage or not have sufficient ordinance and law coverage. And then when a claim happens, all of a sudden they're going back looking, why didn't we ask for this? We didn't know we had this little of coverage. And so it's too little, too late at that point. So making sure you're paying attention to ordinance and law on your renewal is very important.
Yeah, and like Eric said, we're good at what we do in handling claims, but we can't make coverage magically appear where it's not in your policy. So this all has to be planned out on the front end. In the claim development, I've gone over some of these already. We're seeing a higher level of detail in terms of communication and documentation. And because of multiple inspections, we are seeing a longer claim cycle time. What does that mean? It means it takes longer now to get your claim done than it used to in the past. So that's basically what that means, because the carriers are doing more investigation. Again, we're also seeing the coverage limits, the exclusions, and something called ACV, which is actual cash value coverage, particularly on roofs, that are coming into play that are limiting the amount that are being paid out on your claim. We have a slide that goes over what actual cash value versus replacement cost value coverage is. In a nutshell, replacement cost value is the amount it's going to cost to actually replace the item, such as a roof. ACV is the depreciated amount. So think about garage sale pricing. New TV versus a 10-year-old TV. New roof versus a 20-year-old roof. You're going to be paid less. So I know Eric likes to go over this chart, which I think is fantastic.
Yeah, so there's a lot of different stuff being thrown into policies. Like I said, a lot of it is cheaper because they're offering you less. You have less coverage for your roofs, you have less coverage for your siding. There's stuff buried in those policies that you need to be aware of, and that may be why the pricing is cheaper. Actual cash value is one of the worst ones that can be thrown in there. It is now compliant with Fannie, Freddie, and FHA. So about 2 months ago, they made a change that now allows associations to have ACV on their roofs. It's still not compliant with your governing documents and something we would never recommend, but we are seeing associations reach out and say, hey, it's now compliant, we want to save a little bit of money, can you throw ACV on our policy to save a couple bucks? And we go through this example on why not to do it. So the big thing to note here is that when an insurance claim happens, like the roof claim Adina was talking about, you go through the loss assessment portion. The board is only allowed to assess what the insurance company approves or agrees upon. And so with an actual cash value endorsement, you don't have recoverable depreciation, which means you cannot assess back for that. Meaning whatever they take off the cost of your roof, the garage sale pricing, you can't make that difference up by assessing your unit owners via their HO6 policy. You'd have to do it through special assessment. So again, no one loves any assessment, let alone a special assessment and a loss assessment. But in an actual cash value scenario here, on the right would be your traditional policy. You have a roof that is 15 years old, but it's a 30-year shingle. So for easy math, you've gone through 50% of the shelf life of your shingle. On the right, they would say, all right, you got $1 million in damage. The actual cash value of the roof is $500,000 because you're halfway through the life. But you have a replacement cost policy, so we have to kick in that $500,000 in recoverable depreciation to get you to your full $1 million. They'd take their $100,000 deductible out, and you have $900,000 from your association carrier. Now, actual cash value side, there is no recoverable depreciation, so they go through the same math. Say your roof's $1 million, it's only worth $500,000. That zero there is what kills you guys. That's not going to be on your scope of work, which means you can't loss assess for it. You still have your $100,000 deductible. You would get $400,000 from the carrier. That $500,000 has to be made up from the association, whether it's operating, reserves, unit owner's pocket. So a one-page endorsement can change $500,000, a couple $1 million, depending on the size of the association. Obviously something you need to be aware of and hopefully not have on your policy.
Scenario 2, interior water damage claims. Interior water damage claims are probably among the most trickiest type of claims that we can deal with in the insurance claim world. A lot of water claims really come down to which coverage applies, what's the cause of the water loss, and a lot of finger pointing between carriers. In this particular scenario, we have a pipe burst. Now, a pipe burst, again, tricky. Where was the pipe? Was it in between the walls? Was it in someone's unit? Where did the water start from? Was this an issue with maintenance? Was this an issue with underground water? So we're dealing with all sorts of questions about the pipe and where it broke. We have multiple units here that are impacted. Okay, so then is it the master association policy? Is it the individual unit owners that have to cover it? Who is going to cover this damage? And responsibility in this scenario is not clear. Here are the challenges. Again, which policy is going to apply? And you get up into these fights where carriers are pointing at each other and saying, it's not me, it's them. We also see a deductible allocation. Which deductible applies? Is it the big one for the master association? Is it the unit owners, which is typically quite a bit smaller? So which deductible is going to apply? Do we have bare walls or all-in coverage? And what does that even mean? And that's very confusing. So I'm going to defer to Eric to talk about it.
So we get boards reach out all the time and say, I can't see in my policy where it says we're bare walls or all in. No policy, doesn't matter which company, says what coverage definition you have. It never says all in, bare walls, original specification. It doesn't mention any of that. It defers back to the association's declarations. So we always have to kick it back to the board and say, well, it goes back to your declarations. If you don't understand your declarations, if you don't know how they read, if they're ambiguous and don't exactly explicitly say what needs to be covered, it can lead to coverage questions, concerns, issues with adjusters. And so figuring out ahead of time, going through your HOA declarations to understand what specifically it says about your insurance and what your master policy needs to cover or not cover is something very important to do before your claim happens. A lot of times we'll see other agents that don't go through this with the board, and then a claim happens and they're all pointing fingers and going, I thought this was covered. Well, you said that was covered. If the adjuster doesn't have any explicit language in the governing documents, they're going to default to bare walls, and essentially you have to prove that you wanted otherwise. And so making sure you're going through this at renewal to know what your policy actually covers, making sure it aligns with your governing documents. If your governing documents are ambiguous, making sure you're doing a resolution to confirm what it actually covers is extremely important because, again, after the fact, it's very hard to undo some of this mess.
Yeah, and avoiding problems on the front end, again, with planning is going to save you a lot of headache during that claim process. The other piece that comes into play is this confusion between ownership and the responsibility to maintain. Where this commonly comes into play, and I'm going to revert back for a minute to the storm damage, is windows, doors, and skylights. Anything that touches the exterior and the interior of the unit. There may be, for instance, with the windows, a responsibility for the unit owners to maintain them. So if they wear out and they get old, unit owner has to replace them. If there's any sort of maintenance issue, unit owner needs to take care of that. Ownership is something different. Who owns them? Are they a limited common element? Does it fall within the purveyor of the common elements of the association whereby they would be covered under the master policy? So we always want to look at maintenance versus ownership, and that is true also of things like a pipe during a pipe burst. When does it become part of the unit? Is it in that wall cavity between the exterior and interior? And part of that is resolved if you have an all-in policy or an original specifications, because you're covering all the way into that unit under the master policy, versus bare walls. You're really talking about, I think it's the first layer of paint, correct? Yeah, the primer. So you've got something different in that scenario. So again, understanding ownership versus maintenance is very important in conjunction with the coverage and how far it extends from the exterior into the unit. Interior water damage claim life cycle very much mirrors what you're going to see in a storm claim. Claims are very, they're done the same way over and over again by most carriers. You're looking at inspections, you're looking at damage, they're checking it against the policy coverage and what the policy needs to pay for. Again, here you've got multiple policies, so sometimes you've got more than one coming into play. I do want to talk about mitigation of damages for water losses just for a moment, because I see claims sometimes go wrong when it comes to water claims, because people tend to overreact. So you have water spilling everywhere. Of course, you want to get it cleaned up. That is the appropriate response. You want to get professionals like property management, a good mitigation contractor, I noticed, to assist you. But what I've seen sometimes is that people having good intentions will come in, clean everything up, tear everything out, get a dumpster, throw everything in there, and then call in an insurance claim. Insurance adjuster can't look at the damage. They can't identify what the source or cause of that water was, and all of a sudden, you're not getting paid for the damage that could have otherwise been covered if you had gone through the right cadence and steps. Again, where the claim breaks down. Gaps between the coverages of the homeowners association policy and the unit owners. Maybe the unit owner doesn't have an HO6 policy. We've got issues with scope of repair disagreements between the two insurance companies or between your claims handler and the insurance company. And a dispute over what specifically happened to cause that water loss, because sometimes it's not clear.
Yeah, we always talk about water is probably the most difficult claim to handle. Although it may not be the most expensive, the way water is covered under insurance policies is it has to be sudden and accidental. Obviously, it's almost always accidental, but sudden is defined as 14 days. So when Adina mentioned earlier, was it groundwater? Was there a maintenance issue? Maintenance issues are not covered. So if that pipe was leaking for 15 days, all of a sudden you're 1 day past what's considered sudden, and that may not be covered by the policy. Groundwater also excluded. So if you've got a spring where a lot of snow melts and all of a sudden you're getting water in your basement because of it, excluded from insurance. So having someone that knows what they're doing, a vendor that knows how to properly document everything before the adjuster gets out there, can make life a lot easier in a claim scenario.
So board takeaways. Again, understanding both your governing documents and your policy structure before a loss happens is very important. Again, working with a really good broker like Eric and his company, working with a great property management company who can help you assess, make these what are now becoming trickier determinations about we're getting a policy, what does it cover or not, what should we be telling our unit owners to get in terms of their own coverage. Really having professional help with these has become critical as the insurance market continues to shift, both on the coverage and the claims side. Being prepared for immediate responses, knowing who your professionals are. You know, as boards, you rely on professionals to help you make good business judgment decisions for the rest of the membership. So tap into those resources and know who you want to use. And be aware of where your limitations sit under your policy if you choose one that has limitations. Mold is typically either not covered or limited by a very small dollar figure. Understand what you're buying when you buy it. Sewer backup is also similar. Things to do. You want to protect from further damage if you have a claim. You want to make sure everything is documented. You want to make sure you're engaging the right professionals early on, even before you file the claim, to make sure you can. And you want to make sure that, again, that carrier is getting notified promptly after you moved swiftly through your due diligence.
Yeah, I think the choosing the right professional is extremely important. Knowing ahead of time too, because when someone's basement's flooding in the middle of the night and then you're trying to figure out, oh, who should we use for our mitigation company, it's a little too late at that point. And so we've seen plenty of claims go sideways. Like Adina said, they may be overreacting and doing too much mitigation work. They tear out everything, they take no pictures, they don't have any documentation, they just send in a bill for $75,000 and the insurance company, it's hard for them to do anything with that. So there are a lot of good restorations companies that know specifically how to work with insurance companies. They take hundreds of photos, they have sensors out there checking where all the moisture is, they document all of it so then they can properly mitigate and get things to the insurance company and still get coverage for it down the road. And so making sure you have that company lined up ahead of time is extremely important. So we're out of time, so we'll wrap it up quickly here. The good news, silver lining, you got new insurance companies coming into the market. You have good rates coming. You'll possibly see 3 to 4 different carriers this year on your upcoming renewal. It just is more homework for you guys. There's a lot of things to be aware of. I know it's not a fun topic to think about or study over the weekend, but as you go through your renewal process, make sure you are asking the right questions, because that one page that gets thrown into your policy can cost hundreds of thousands of dollars. And however great Adina and her team are, they can't undo things after the fact. So make sure you know what you're buying, know what you're paying for, and make sure that when a claim happens, you're not going to be surprised by any page 175 of 200 on your policy that now limits hundreds of thousands of dollars for you.